Hey, what is up, YouTubers, day traders, and market participants? We are going to be reviewing in today's video a play I made on Microsoft. Very good play that was going from, and this will be the market cycle of extended, right? Extended, wide range, back to narrow, back to trending into narrow. So this is going to be a very educational video. I hope you guys stick tuned through the whole thing. Like, comment, subscribe, join the family. And to my future self, Will, trust your initial analysis. You're on to something. You know what you're doing. Trust it. But let's go ahead and get into the video.
You serious?
All right, so let's talk a little bit about the video, and let's go ahead and get my drawing tool out. So this will be the extended stock price retracement kind of method, right? So going from an extended stock price, and this is, you can call it retracement, getting back to the compression state. But basically, markets, they have three different states. They have, this is the 200, you could say this is the 20 moving average, and then you have the 200 moving average, right? So this is called the narrow right here. This is the narrow state. Then you got the trending state where the 20 goes like this, and then you got the 200. It follows along, but it doesn't quite give you that same trajectory as the 20 moving average does. So this is the trending state, and then you have the extended state where the 20 moving average is all the way up here, and you have the 200 moving average, which is down here. Let me go ahead and remove that. This will be more of the extended state right here. And why is this considered the extended state? Because the 200 moving average and the 20 have this huge gap in between them, and then most of the time the price itself will also be up here, giving you another extended portion from the actual stock and the 200s, right? So narrow, that compression state, when price is really consolidating, right? To trending, it can go up or down the trending state, right? Where you're actually making the actual move. And then the extended state where things are oversold, overbought, the RSI, where the price is going to come back eventually to trending back to narrow, right? So with this education in mind, we are going to be looking at the extended state, right? So let's go ahead and jump into Microsoft. Microsoft had some good news. It was the company was buying back. And is it just coincidence that the news comes out now? And I'm going to kind of explain that. But Microsoft says that they are going to buy back like 160 billion shares or something like that, right? A little buyback program. We all know they have the buyback program. But look at how price here. See how we're in this wide state? This is today. This is Tuesday. See how we have this wide state right here? Now we have the wide. Now we have another wide from the price and the 20. So notice here you have that same thing, but this extended state is not that big yet, right? So it does come back down, but it holds and pushes back up. Now the same thing happens here, but it's not that wide yet as this one, right? It is kind of, but the price isn't too far. It does come back to the 8 and then travels along the 8. Now, in this state right here, we have some consolidation. Is it just coincidence that we are consolidating so high above that we post this news and now we're all the way up here just to see the sell-off happen and trap people who are like, oh, Microsoft just did what? Let's buy in, and it traps you in, and it actually was a selling opportunity, not a buy opportunity, right? And this is the 15 and the 30-minute chart. So you can see on the 15-minute chart, we got that extended state, and on the 30-minute chart, we got that extended state. So honestly, that should have been my first sign of this could take longer to play out, right? It's not going to be the quick 2-minute, 5-minute trade, since I'm seeing this all take place on the 15-minute chart and the 30-minute chart, right? So I should have gave myself more time, because I did not capitalize on this trade as much as I would have liked to, right? And you can kind of see that here was your first good buy opportunity on the first 30 minutes. Was you get this 15-minute green shoot up, but then you get a red engulfing with a high. So high candle and it's red, that's a negative sign. That means it got to the high, hit the high, and then sold off hard into a red candle, and it engulfed a green before it. That should have honestly been my first sign that this is the play. And I ignored it. I don't know why I ignored it, but I did, because I was skeptical. Market was pushing up, it started to play along, and I should have stuck to my original analysis, right? And here is the next chart we'll be getting into. It is the 2-minute and the 5-minute. Here's another reason why I was scared. So like I was mentioning, the 15-minute and the 30-minute were where I saw the setups, right? So I should have gave it time. The 2-minute wasn't playing along, because the 2-minute has this, like I said, all Monday it was consolidating, right? It has this consolidation. Now you shoot out of the consolidation, we could go into trending state, right? However, we're so far up, if maybe it would have opened up here and it had a huge green shoot, I would have been like, okay, maybe it's then that would have been an easy long, right, back up to these prices. But since we already started up here, that should have made me skeptical, or that should have also given me confluence. But the 5-minute is where I was like, oh, we're extended now. Well, we weren't really extended yet on the 5-minute, and that's where I think this is a baby extension. Like right here, when you would have made the decision to go short, this is the extension when literally the other day you had a bigger extended price action going on days before. So the 5-minute chart really didn't help me out. And the 2-minute chart was there, but I should have stuck to the 5-minute or the 15 and the 30-minute to let it really, really play out, right? Because I actually got out of the trade because I thought it wasn't working, and I was just like, you know what? I'm going to go ahead and lose less money instead of waiting for it to go to my stop. Wrong. For your reason for entry, stick to it. Stick to the reason for entry, right? So here is the play. So I'm waiting, I'm chilling, I'm looking at everything, and here comes Microsoft. Oh, you can't really see it that well because my face is in the picture. Let's go ahead and move myself. That's not what we wanted to do, so I'll put myself down here. All right, so here is the play, and I was very patient with it, and I was kind of considering this because I still have that initial thought in my head of it's extended, but that wasn't a solid red, so I didn't take that. Then here I actually was like, okay, this could be a good long off of the 8 back up to the upside, and it sure was a good long. I did not take it because I wanted the short, right? I wanted the short, and another trade I was doing another trade, and that trade messed me up too. But that was a good long. I didn't take it, but here's where the short comes into play. We have a huge demon candle spawning from the top, coming from the higher prices. It makes a high, and then the next candle should give you a little bit of another high, just a little bit of a touch of a high, to solidify the high. Like that's 2 candles saying, hey, we just made a new high. This was one candle that made a high, and then the other one was fairly equal to it, and also just rejected and covered up so much green. It nullified that candle, and almost took up this candle. So that was my buying trigger. I said, all right, I'm jumping in. I jumped in at 9:50 in 10 seconds. So 10 seconds into this next bar, I was 10 seconds late. I should have been in at this bar at 9:49:55, right? So I missed that, but that's okay. That was near here or there. I also did get filled really bad on the contracts. I did choose the wrong options. I chose the what did I choose? I think I chose the 427.5. I should have stuck to a whole number contract, so that was my mistake. So I got there was a big spread on it, so I got a bad fill, which also made me very skeptical. So basically on that bad fill, when it went down twice, I actually didn't get paid that much. I didn't get paid at all. I was actually almost losing money because of how bad the fill was. So I didn't even make money here, and that's also what kind of made me like, I got a bad fill, really? And I'm like, So it starts coming down to the 20 moving average, right? And it hits here, then it rejects and pushes up, and I'm like, okay, maybe we're gonna follow the 20 moving average. And before you know it, I said, you know what, the whole market was pushing up too, and Tesla pushed up, and I was just everything was pushing up. So I was just like, you know what, we might go back to the highs and test out the highs. Let me just go ahead and get out of this play. Wrong. I was literally 4 minutes too early. If I would have given myself just 2 more minutes for everything to play out. This candle was a strong reversal sign. Why is this now? Why are the pins so big? The pin's very big now. That gave it the reversal sign right here, and then this was payday right here. That was payday. But I didn't hold. And this is my reason for entry, right? If this is my reason for entry, I want to wait all the way up here. That's why my initial stop loss was up here. And I just thought I could be like, I'm going to save money. Why let it go all the way back up? I can clearly see that there is positive momentum right now, and that took me out. But you got to stick to your original analysis. I could see where it was going. I just didn't stick through with it because, this would have been an easy, nice. After these lows right here, we would have had, dang, this pin is mad. What did I do? So this is a good 1 push, 2 push. I would have been definitely out here. And then the last contract, I could have maybe rode all day. I could have potentially rode it all day into all of this. And this is actually a perfect flow down. This would be considered leg 1. Leg 2, leg 3. This gave you almost 5 legs. This almost gave you 6 legs. Oh my god. That was sell. That was an automated sell process. And you see how the news is so manipulated for them to put it out at the right time. Because before, if you were just trading off of hype, emotion, and news, you're just like, there's really good news. Microsoft is up 2%. Where could we go? Another 1%, another 2-3%. Just for you to get hammered and smashed and hit into the ground all day, expecting or waiting for a reversal, and you never got that reversal. Even though the news was good and positive for the stock, they sold already up here. And every single person that came in, they were ready to just keep selling it on you all day long to take that profit. And is it coincidental it's right before the Fed decision is tomorrow and does the rate cuts? I'm telling you guys, been doing this for a while. I hope you guys are enjoying my content. Hope you guys stick around, join the family, like, comment, subscribe. That is it for this video. I hope you guys enjoyed. I will catch you guys later. Peace.